Good evening, everybody. Let's go ahead and get started. Want to welcome everybody here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic evening so far. Looking forward to our COT report webinar. It was great to see a lot of you guys in the copy trader and EA webinar that we just had a few moments ago. That was a really good call. I've already uploaded the recording. It's just rendering right now. So if you want to go watch that class or go back and watch it in the next hour or so, it will be available. Or if you want to watch it this weekend or whenever you have time, it's available for viewing, which will be great. But that was a great call. I really enjoy that call. We do it once a month. Um, I really love what we've been able to do with copy traders and EAs. Oh, I forgot to mention, we're actually building out right now. We have an EA that we're putting together for the overnight trading strategy. So that's going to be super exciting when that is launched. You guys are going to love that. I'm really excited to um, share that. And it will also be able to trade. You can turn it off and on in the settings, but you can have it trade the London session, the New York session, or the Tokyo session, or all three if you choose. So it's really, really exciting. Um, we're probably also going to offer just um, a copy trader, and this will be by invite, like through like you guys will be invited. If you're a member of the program, you will be invited. We're going to try to keep it a lot cheaper. It's not going to be something that we offer out to people outside the program. Partly because the strategy is a little bit something that we've done together as a group, and so we're trying to keep it close together as a group as well, especially for people who kind of understand it and have resources in the program, right? So that's something that we're going to be doing too, which I'm really excited about. So I didn't mention that in the copy trader webinar, just barely, but yeah, that's in the makes right now. So one of the things that people have told me is they're like, hey, I'd love to trade the overnight strategy, but I have to stay up a little too late for it. And so that's why we want to make it something that you guys can do a little more automated, which I think will be really awesome. Um, ETA on that. So I'm hoping to have the copy trader available this weekend. That's the plan. The copy trader, the EA is going to need a little bit more time. We need to work the bugs out. It's already working technically, the EA, but I want to test it out for some weeks just because technology. Copy trader is fine because it's just me. I'll be taking the trades, so it's not a big issue. I'm not worried about the technology that way because I'm just going to take the trades. But when you're talking about lines of code and I'm not somebody who codes and I have somebody else who's helping me and we're helping each other, we need to test that out for a little bit longer before we launch that. So, and I want to put my own money online before I put anybody else's money on it. So, but that's coming. Yeah, the copy trader I'm hoping to have done this weekend. And then again, I don't think I'm going to make it like a big, at least not for now. I don't think it's going to be something that we offer out. So it'll be something that just if you guys want to use it, you can. We'll probably just give it away for really low price. We're thinking something like $50 a month, $30 a month, something like that is probably what we'll do. Um, and then, and honestly, I'm probably gonna make it just something part of your membership. So anybody who's a member of the program will have access type of thing. But I don't want it to be something that people outside the program can get into, at least not yet. So anyway, that's exciting. I'm really excited to launch that. But tonight, like I said, that webinar is uploaded. You guys can go watch it. But tonight, I do have some things prepared for the COT report that I want to go over. We do have a lot of new folks in the program. We've had a lot of people sign up for the program in the last couple of weeks. And so I want to make sure that we go over the basics of the COT report and how it works in the scanner, and kind of give everybody a rundown on what this is and why we use it. So let's jump into this. Before we get started, as always, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. Let's jump into this. So, COT report. So I've been using the COT report for probably like, let's go to CFTC, like 8 years, maybe 9 years now, 8 or 9 years. I've been using the COT report a long time. It's actually kind of crazy to say that I've been using it that long. And it works. It's a very valuable piece of information. If you know how to use it and what to use it for, it's very useful. Basically, what COT data is it tells you what the banks are buying and selling on a week to week basis when they release their commitment of traders data to the CFTC, which they're required to do every Tuesday. So if you're a big bank and you own a lot of future contracts or forex contracts, commodities contracts, you're required to give that information to the CFTC if you trade on an exchange like the Chicago Mercantile Exchange. Really common place to trade in futures. And if you're a listed bank, you have to release that information. Otherwise, you can get penalized. I don't know what the penalty is. Doesn't matter, but you get penalized. It's just how it works, right? So that's what these guys do. The CFTC, they're a financial regulatory authority in the United States, and you can access this data as a citizen for free. And this is, by the way, it's available to people outside the United States too. So I know I'm talking to a lot of people, especially in the recording, who are not from the United States. So you can have access to this data. I know a lot of people in the UK and Australia, New Zealand, South Africa, they all access this data weekly. And it's just data on US banks, but it's a very good metric on finding out what international banks are doing as well, because they often trade together. So if I go to commitment of traders right here on this ribbon and click on this, this is where I find these reports. So you have reports for agriculture, petroleum, natural gas, electricity, metals. You've got reports for futures, and these are the legacy reports. And this is specifically the legacy report for the CME. And if you click on short format, this is what it looks like. And this is going to give you the most recent report. And you'll notice it's dated as a Tuesday, and it's always going to be dated a Tuesday, the most recent Tuesday. Okay. Um, and you might be like, well, that's kind of dated. And I do get it. It kind of is. It's not like a report that comes out today, or what are the banks buying today. This is an overall report. So when we use this information, we have to take trades based off of how this information is given to us. A lot of people like to take the COT report. I've seen this over the last 8 years. I've done this myself. They like to take the data and use it the way they want to use it. We really should try to figure out what the data is saying and trade the data the way it wants to be traded. Okay. So this data is more for people who want to swing trade and do long-term trading as well. Okay. So if you're trying to scalp with this information, which a lot of people have tried to do, I've even tried to do it, you're probably going to be very unsuccessful and probably unhappy with COT report data. Okay. And it's not a reflection on the data. The data works, but it doesn't work for the type of style that a lot of scalpers want to do. It's just not meant for that. Okay, so when you look at the data, it tells you certain things that's really, really cool. So, let me show you, for example, like the euro. So I like to navigate through this COT report. With Control F on my keyboard, because otherwise I don't know how I'd find everything. The report's huge. Look how big this is on my scroll bar. This thing is huge. So the only way you're going to find stuff is if you kind of do a Control F and then you go right to where you want to go. So I just do Control F on my keyboard and then I search Euro, and then I just go specifically to Euro futures or FX right here. And so this tells me what the banks are buying and selling. Right here, you got the long contracts and you got the short contracts. So right here, you got the euro, 164,000 contracts long and 173,000 contracts short. So basically and how big is a contract? Well, with these, a contract's $125,000.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve's Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
So that's basically $125,000 times, if you want to look at the long positions, it's 125,000 times 164,000. Actually, somebody do the math for me on that. Just go on a Google calculator, because you're going to need that many digits. What's 125,000 times 164,000? Just curious to find out what that number is. Probably in the many billions. It's got to be in the B's. I don't think it's in the T's if I'm doing mental math correctly, but yeah, it's a big number. I'd love to see if somebody can figure that out in the chat box and tell me what that is. It's a lot of money. Okay. So we don't move that kind of money. I mean, when I take trades, sometimes with my overnight trades, it does require a little bit more leverage. So, I took a trade last night that I think had like 8 or 9 contracts on my $100,000 account, and that's a big trade, right? I've had trades last week on the overnight strategy that got up to, yeah, like 8 or 9 contracts, something like that. Probably the biggest trade I took last week was an overnight trade. And so for me to move around 10 contracts, it's normal, but it's a lot, right? 10 contracts is a lot. And so when these guys have 164,000 contracts on just their long side, that's huge, right? And that's only counting for the non-commercial side. You've also got the commercial side. So just so you know, when you're looking at COT data, non-commercial side is basically your hedge funds and traders who speculate. They're known as the large specs. Commercial side is the non-speculators, and commercial is usually, like, an example of this would be a wheat farmer who owns thousands of acres, and what they do is they'll short a futures on wheat or something like that, or they'll use it to offset their crop. Okay, and so they know how the economy's looking for their industry, and so they'll use futures to offset their operations. Okay, so another example would be maybe a gold miner, and they want to, uh, if their business isn't doing as well, they might take a short on gold or something, right? Something like that. That's what the commercial side is. So it's big companies that trade in commodities and futures to at multinational corporations to operate their business, but they're not really trading for the purpose of making a profit. It's more to operate. Versus non-commercial, this is people like you and me, but they're bigger. Like I'm sitting at my computer actively trying to make money in the markets and finding unique ways to make more money, right? That's what you're doing too. And that's what non-commercial is doing behind their desks actively right now is they're trying to find ways to make more money in the market. And that's what non-commercial is. So we follow these guys because they're usually pretty good at trading and they have our goals in mind. All right. Well, we have more specifically our goals match with what they want to do. And so that's why we follow non-commercial. All right. So this is really helpful information, right? So they have a lot of contracts. Again, this is billions of dollars we're looking at right here, these two numbers. And so right now they have a slightly larger position on euro shorts. So it looks like they're selling the euro a little bit more. That doesn't mean a whole ton. It doesn't look like by a lot more. It's actually close to 50-50, to be honest. I'm not sure what the difference is actually from a percentage standpoint, but it's probably like tilted 55-45 percentage. I'm not sure what the actual number is. I'm sure I could figure it out pretty quick. I probably do have it figured out. It's just on my spreadsheet that builds out the scanner. Which, by the way, for those that don't know, the scanner is basically just all sorts of derivatives of COT data and sentiment data, and that's how you get those signals each week from the scanner is from COT data and sentiment data. All right, so right here you've got down below, these are the changes in data. So right here where it says minus 3001 contracts, and then right here it says minus 1913 contracts. That's saying that there's been a decrease in short positions to the tune of 1913 contracts from the last report that was given out on 625 of last month. Okay. So this is really important. This is actually kind of the essence of the data. To me, it's more important. My mentor kind of taught me this a long time ago. It's more important to know where the market is trending than where it actually is right now. It's the same thing with interest rates, right? When the Fed starts talking about where rates are going, the market cares more about that. Like I care more about where the rates are going if I'm buying a house than where they're at even right now, right? Like when I make a business decision on whether or not I'm going to expand or not, to me, I care more about what they're doing with rates, not where they are at with rates, right? So rates are high, but if there's conversation about bringing rates lower, to me that's a that's a bigger conversation. That's a more important conversation. This exact same thing happened a couple years ago in late 2021 and early 2022. Rates were really low at the time. Okay, so we're kind of having the opposite thing actually happen right now. Rates were low back then, and bonds were super overpriced. So you had the opposite, right? Right now you got bonds in the gutter and rates are high, so it's got opposite, right? So what happened at the time is there was speculation that rates were going to start going back up. That the Fed was going to, end of cough that we had a couple years ago, right? And they were going to start to raise rates again. And so as they started to talk about that, the market actually responded to it faster than even the rates had time to go up. So before they even raised the rates, the market had already priced into mortgages, to auto loans, to credit cards, you name it, that was already priced in via the market before the Fed had even raised the rates. The same thing's happening right now. So you've got speculation that there might be lower rates coming soon. We'll see. We actually have a CPI report coming out pretty soon here, and I think it's tomorrow if I recall. Um, and actually, the last one we had was looking a little bit better. So if that continues, then the conversation about lower rates will speed up. And if that conversation looks like it's going to be a reality, and we get set in stone rates, not set in stone, but like it's pretty clear that they're going to lower, the market will anticipate that, and mortgage rates will start to finally come down. Interest rates on credit cards will come down faster than the Fed will actually lower them. You'll see car loan rates drop faster. So that for most people, that's an exciting thing. Um, we'll see what all the other effects are. But the reason I don't that's a whole nother webinar, but I just bring up that example because it has everything to do with what we're talking about here with the COT report, because what the changes in COT data is more important to me than where they are at. So this number right here, these two numbers are important and we analyze them. It goes into the COT report, it goes into this scanner, and we do analyze that. It's all important. But for me, the shift in what they're doing is probably the most important thing. All right. So so this is basically it. Like you can search anything you want. Like you can search Aussie, you can search pound. By the way, you'll come in here and you'll notice they're not currency pairs. These are just isolated individual currencies. Why is that? So in Forex, you got to remember it's a decentralized market. There's no exchange. Everybody who trades Forex basically makes their price. So when you trade with, that's why brokers are a big deal in Forex. You always hear people saying, should I trade with a Wanda or should I trade with Forex.com? Who should I trade with? People have those types of conversations all the time um, because it's a decentralized market, right? So you don't, so in Forex is regulated by the CFTC, but you're not going to find Forex pairs here because it's not on an exchange. Okay. So the way we use COT data is we look at individual currencies and then we're able to build out a story. Okay. So in fact, I'll show you guys something. I don't show this to everybody, but here's the actual journal where we put together our like here's the COT. This is where I put together the scanner basically. So there's a lot of stuff that goes into it, but we look at everything like individual currencies right here. You can see like here's the Aussie, here's the CAD, here's the franc, here's the euro, and then we're able to take all this information like on the different shifts. We look at the footprint on the long-term data. We pull all this together and then we're able to get a signal, right? So there's a lot of different things we look at and we'll discuss some of those specific things. But I wanted to ask you guys because I've talked a lot here, what questions you guys might have up to this point. Like are there specific questions you guys have about the COT data, how it works, maybe how the scanner works? By the way, on the scanner, I wanted to show you guys this. When you go to the Steve scanner, um, I think I mentioned this a few days ago, but I want to make sure everybody knows this. So we were having an issue with pulling sentiment data right here. So you get sentiment data, sentiment signals right here throughout the week, and you've got this percent long and percent short. This used to not update automatically. It does now. We had an issue with it in the past where it wouldn't update manually. Now it's working. It's working fantastically. So if you come in here, this is auto updating. As the market moves, you're getting new sentiment data. Okay, so when you filter this, you can see like right here, what does this mean when it says 83, when it says 83% long on the NZD franc? What that means is that retail traders, not banks, by the way, this is retail. So people like you and me, 83% of them are buying the NZD franc. And when you go to the short side, you can see that 17% of traders are short on the NZD franc. Why is that important? Because when we use sentiment data, we go in the opposite direction typically of what retail is doing. And if we can get confirmation that retail is going one direction, and the COT data is going another, then that's a really good thing. So let me see if we can find a signal that matches up pretty well with this. Um, yeah, like just like I don't know. Let's look at yeah, like the USD JPY. This is a really good signal this week. The franc yen's been a really good signal. That's a strong buy as well. Actually, this one's almost strong buy in everything. But you can look at the USD yen, and it's a overall strong buy. The 5 week shifts a buy signal. The 3 week shifts a strong buy. the long-term signals a buy, and the sentiment signals a buy right now. So when you have that many things saying like, here's a buy, 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 obviously that's going to be the direction you want to go. Especially when you get confirmation. Sometimes you'll have things that go contrary. So like if you come down here, you'll find some of these neutral signals. Let's see if we can find one that's contrary. Yeah, like for example, here's the NZD CAD. So with the NZD CAD right now, you've got the shifts. So the 5 week shift says strong buy. The 3 week shift says strong buy. The long term signal says strong sell, and the sentiment signals sell. So what what the heck do you do there? Well, here's my conclusion. Don't do anything. Like don't trade that. If you get the shift in COT data over 3 weeks and 5 weeks telling you to do something, that's a big deal. Like, we got to look at that. But the long-term signal is not saying the same thing. It's actually saying the opposite. And the sentiment signal is also saying the opposite. So when that happens, what do you do? Well, that's why we follow the overall signal at the end of the day, which is neutral. So you'll see that throughout the scanner when you're going through here. You're going to see you're going to have opportunities that come along, and you're going to be like, oh, should I take this trade? Well, just look at the overall signal. It's the most important thing. So I like to filter this by overall signal, and this will tell you which currency pairs you should probably focus on this week. Um, or even for the next couple of weeks. So a lot of the times these signals persist. Like for example, this Aussie CAD, it's been a strong buy for many weeks now. That's been one of our top signals, and it's done very, very well. It's been there just over and over and over again, and for good reason, right? You've got the 5 week shift, which, by the way, what does that mean? So for some, this is a good COT data question, very pertinent to the webinar. So you got this 5 week shift and the 3 week shift for those that don't know what this is. So the 5 week shift is basically you take where the banks were 5 weeks ago, as far as their long and short positions are, considering those versus where they are today as of the last COT report, and what the difference is. And if that difference is big, and then we're gonna, and if it's positive, then we're gonna issue a buy signal as far as the 5 week shift goes. So we're trying to basically catch the banks trending a certain direction. So how do you know this? So like when you look at this, you see as a strong buy, right adjacent to that signal where it says strong buy, under the 5 week, you can actually see it says 5 week non-commercial percent net shift. What that means is that the banks, this is their percent shift. So 40.43% is their shift over 5 weeks. So the banks have increased their long positions on the Aussie CAD to the tune of 40.43% over the last 5 weeks. That's actually a pretty big shift over 5 weeks, if you're a bank. That's pretty big. Anything like over 20 or 25% is a decently big shift. And so you want to be looking generally for long opportunities when you see that kind of a shift. Then you get to the 3 week shift, which is actually my favorite shift of all, because it tells us a little bit more about like what are the most recent things happening to the market. So the 3 week shift is also strong buy. And if you look adjacent to it, you'll see it's 22.93. So what that means is that the banks have increased their positions over the last 3 weeks specifically to the tune of 22.93%. So there's definitely this momentum to buy the Aussie CAD if you're a bank right now. And those are two very important things. We also have what's called the long-term signal. This is the footprint. The crowded market signals will usually find their way through the long-term column. If it says strong buy or strong sell, then it's probably a crowded market signal. I'll teach you what that is here in just a second. But then you got the long term, so that's very important. And then you've got the sentiment signal, which is also very important because that tells you what the little guys are buying and selling. Because if the little guys are in the wrong direction, then you know that you're following the right thing. Because if it says strong buy, meanwhile, the shifts say strong buy, that means you're basically trading against dumb money, but you're trading with the banks. And when those things jive together, we're going to issue a strong buy signal on the scanner. It's kind of amazing if you think about it. Like you're waiting for not just the banks, but you're also waiting for Trader Joe, the average Trader Joe to enter the market. And you're basically trading against him and you're trying to trade with the banks. And when Trader Joe trades against the banks and the banks are trading against Trader Joe, as soon as we get both of those signals to jive together, that's when we strike. We try to go together, which is the idea, right? Pretty cool. Um, Last week I challenged you guys, for those that were here, to look specifically at the crowded market alerter. So this is probably a part of the scanner that gets overlooked quite a bit. It's the very right hand side, so he gets forgotten, but it's one of the most powerful things we have on the scanner. And some people I know in the program, because we have like 110, 120 people in the program, and so there's a good amount of people that only do this. It's always interesting to me to see people kind of go off in their niches and find what works. And if I can help you find what that is, great. I just care that each one of you finds a way to, make the money that you're hoping to make, however that looks. And if you need some self-discovery, I can help you get there. If that's through the overnight strategy, if that's through the weekly trades, if that's through some derivative of the scanner, if it's through price action trades, whatever it is, let's find what works for you and what you're willing to commit to do. And let's get you on a game plan to get you to the point where you're, finally getting the income that you're hoping to make. Right. But some people in the program, they just trade the crowded market indicator. And this is it. It's fun to see how they use it. And it's actually given me some ideas. But this is probably the most underused and like like unsung heroes of the scanner that I think is really, really cool. So what this indicator is, it's on the very right. You can filter it right here. It tells you what like I said, it's just called the crowded market indicator. It's just 1 out of 5 stars. And when you have 1 stars out of 5, that basically means that the banks, they're not really biased, okay, on this pair. Okay, so they have positions open on those currency pairs, but they don't really have like a direction that they're really trying to push long term. They're just whatever. Okay. And so 1 out of 5 stars is not something that I really look at pretty much at all. But the 5 out of 5 stars really do matter. And we've actually got like 10 of them right now. There's probably 10 currency pairs and CFDs that are 5 out of 5 stars. So it's a solid amount. There's also several 4 out of 5s. There's also a good amount that are 3 out of 5s down here. There's a couple of 2 out of 5s and then several 1 out of 5s down there. So basically, what this does is, and this is, you're going to love this for those that have never heard this. It's so awesome. Basically, 5 out of 5 stars means that the banks have a huge position, like they're crowded type of position. And you don't know if they're buying or selling. I'll show you how to figure that out, but just know that this is just trying to tell you that those that have 5 out of 5 stars are the banks are so big that they're at risk of a reversal. Okay, which is super awesome because when they get so big into a position, they have no choice but to start to sell off that position in the coming weeks, in the coming months. They're going to have to hand over that position to somebody else, probably retail traders. As they give that position away to retail traders, they're taking profits actively. As they do so, that's going to send the market in the other direction. Okay, so like right now, the euro franc's in crowded market stage, the pound CAD's in crowded market, pound franc, pound yen, NZD CAD, NZD franc. A lot of these are in crowded market stage, like I was saying. Um, and so the banks have to start to offload these positions. Now, how do you know which direction to go? So the crowded market signal works hand in glove with the long-term signal. Okay, because when the banks are crowded, it doesn't mean that the market's going to reverse today. It doesn't mean it's going to reverse tomorrow. Probably not even, well, it could be this week, but may not be. It means that they're probably going to send the market into a reversal in the next couple of weeks. It could be in the next couple of months. It could be over a couple of months. It'll probably happen sooner, but the process could take a couple of months for them to sell off that position. So you got to be careful with this for a couple of reasons because a lot of people get really jazzed and excited about the crowded market indicator, but then they try to scalp it and it's not something to be scalped. It is totally something to just inform you that the markets are crowded by the banks and they're likely to take profits. So the way I like to do this is I like to look for markets that, like, say, for example, with the Euro franc, it's crowded right now, and you know that they're crowded into a long position because the long-term signal says strong sell. So notice how each one of these 5 out of 5 stars has a long-term signal that says strong buyer, strong sell. Well, the reason for that is because we programmed it that way so that the long-term signal goes off on a long-term strong buyer, strong sell signal, depending on what the crowded market says. If it's 5 out of 5 stars, then in fact, there's going to be a long term strong buyer, strong sell signal. So, what a lot of people do, and I do the same thing, is I'll go out on these currency pairs on like a daily time frame, maybe even like a weekly time frame. And if I find a major supply zone or a demand zone where the market will reverse or likely reverse from, I'll get a little bit more excited about taking a trade at that zone because the banks probably have the same game plan as I do, right? So let me give you an example of this. So the Euro francs in crowded market phase, it's 5 out of 5 stars. It's the top one on the list. It's strong sell right here. So if I went to a daily chart on the Euro franc and I saw that in about 50 pips, the market would hit a major supply area, then that would be a fantastic place, at least a good place to put a sell, put like a sell limit. And when the market gets there this week or next week or in a couple of weeks, that order can execute. And then you can basically try to sell the top of the market where the banks are trying to sell the top of the market. Pretty cool, right? So we can go find some other examples. In fact, let's just go look at the Euro franc. It's 5 out of 5 stars. It's a strong sell in the long-term column. Sentiment's a strong sell right now. Actually, I think this pair has actually come down over the last. Let's go look at the chart here. I think this pair has actually come down over the last um, couple of weeks. But let's double check here. Oh no, it hasn't. Oh, this is perfect. Okay. Well, no, I guess it did it like several weeks ago. Okay, so the banks are starting to sell this, like I was saying, or they have a huge long position that they're at risk of starting to close. And so what I would do is I'd come on here to this is an hourly time frame. Let me actually go out to the daily and I'll show you kind of how you would do this. You'd come out here to the daily and then you'd be like, okay, let's expand this out. And then you would look for supply areas. So you could turn on these order block indicators if you don't know how to find supply. You can use this one from LuxAlgo, this order block detector, or you can use Sonar Lab, or you can use the Smart Money Indicator by LuxAlgo. And this will show you the different areas where the market's likely to reverse on a daily time frame. So we're actually kind of at an area of supply right through here. That's actually why the market on this daily chart has kind of slowed in this area. The next likely area to see a reversal is all the way up here. So this one is not that close, to be honest, to a reversal area where I'd be like, oh, yeah, that's great. I'd be a little bit hesitant because it could actually go up a little bit higher up into these areas before you start to see that pullback. So this is one where I might be like, not so sure about just yet, but you've got 10 other options. So you go to the scanner and you'd be like, okay, let's see what else is in crowded market stage. You could be like, okay, the USD franc, that's another franc one. So let's do something that's different, like the pound CAD. So the pound CAD is crowded market stage because it's 5 out of 5 stars and the long-term signal says strong sell. So we could go to the pound CAD on a daily and let's see if we can find those daily supply zones where you might be able to find an area to sell. Okay, perfect. So this is actually really, really good. So So here's the daily time frame on the pound CAD. It had a nice structure break right here. Um, of this trend line and how the market's coming back up, it's going to retest, or it's currently retesting this supply area. Okay. This is unstable. This is an unstable place because the banks are super crowded. They've got a huge position right now. So this is at risk of pulling back. I'm not saying this could pull back right now. So don't get too excited. Like, don't go out and bet your farm that this is going to go down. But what this is trying to tell you is that while it's up in here, there's a good chance you're going to get a pullback here over the next, could be a couple days, could be a week, could be could be several weeks, right? But these types of moves last a long time. So when this finally does decide to pull back, this could go down for a couple of weeks is basically what we're saying. When that finally does fall apart, this one's a lot closer than the Euro franc. As you can see, there's a lot of supply nestled right through here, a lot of blocks in this area. That's the kind of stuff I like to find when I'm trying to figure out, okay, what's the next long-term signal to come out of the scanner that's just going to be a powerhouse opportunity. And this is definitely one that would hit me as I would recognize this as, one that would be probably pretty good. Okay. All right. Any questions about the crowded market indicator? Feel free to dive into that this week if you haven't done so yet. Feel free to look at the different opportunities. There's a lot of different things and ways you can trade this. So, like I said, there's people who only look for long-term opportunities using the crowded market indicator. The way we've got this set up on the weekly trades is if I have a crowded market signal, I need to make sure that the shifts agree with that. Like right now with the Euro franc. We got an overall strong sell this week. And the reason why we're okay with that is because the sentiment's a strong sell, the long term's a strong sell, the shifts are currently at sells right now. So that's to me, that's a signal worth. I think there's enough confirmation there to probably make it a successful weekly trade. Um, but it's not guaranteed, but I think that's a good one. The ones that have done very well this week, as you guys know, is the dollar yen and AJ. So Aussie yen and the USD JPY, all of those have just, wow, amazing. Like Aussie yen was a great call this week. Um, got shifts, banks have shifted to the buys really well. The long-term signals of buy, the sentiment signals of buy, like everything is just spot on, just the way you would like it. So all right, guys. Well, I think that's about it. I don't see any questions there, so I think we'll go ahead and wrap up. But I appreciate each one of you. We do have live trading in the morning. We'll go ahead and look at some of our open trades that we've got. We got that USD yen that triggered yesterday. It's price action trade. It's up, 50 to 70 pips right now. It's looking really good. Happy about that. Hopefully, we can get that Aussie CAD price action traded trigger. That would be great from Telegram. But yeah, tomorrow we'll take some new trades and. So I'll see you guys there if you can come. All right, guys. Thanks for coming. Have a fantastic evening, and we'll see you guys in the next call.